What is up? What is up? We are live. Evan, how you doing?
Dang. We hear me? We hear me? Okay,
Yes,
so I'm
sir.
still
Yes, sir.
listening
What a
to
wild
the
day.
I was listening to the countdown still there. It was very nice. We're getting some comments that's professional. I'm getting this posted everywhere. We got the spaces starting in a couple minutes here. This is just a crazy day here. We're recovering a little bit. Not a lot of it. My portfolio is actually green right now, barely. We're up 0.02% after being down 5% at some point in the pre-market trading, opening up the day down around 4% on my portfolio. I did buy a couple things last night, and we got a lot of stuff to talk about on here, but I'm just tweeting this out, putting it up on Instagram, all of that good stuff. I'm looking at the chat. What's up, Victor? Victor. It's probably Victor. But yeah, and how are you doing today? We got Power Hour starting in 5 minutes here. This is a big day. Right now we're hanging around even, and I'm guessing we're gonna close the day up or down by more than 1%. I don't think that this is an even day, so I think we have
You don't think it
a
settles right
sizable
here?
move in coming. I do not think it settles right here. I think we got a move coming up. Can you run us through kind of a little bit of what today looked like? Maybe some of the overnight session too, if you have that on there. SPY, QQQ, maybe some of the stocks. I know my Apple's underperforming as well. I'm looking at the YouTube live chat. If you guys are coming in here, make sure you're saying hello too. But yeah,
Yeah, so here's I know this is going to be tough to see for a lot of people. Let me hide this. So last
let's
night
do one at a time.
we opened up way down. This is NQ and ES side by side. We opened up way down. You can see this entire blue shaded area is the overnight. Since then, we had a massive pump this
Yeah,
morning.
do only one of them at a time, and then cut a little bit of a zoom in or something.
Yeah, I can do it this way. So here's a 15-minute chart on NQ. ES is going to look the same. We went down, obviously at the open. Overnight, basically made a double bottom here. Sorry, my news squawker is still turned on. Let's turn that off. We're boom, off. Okay.
Keep it on. Keep it on. Keep it on. Let us know what they're saying. We are doing a little live trading on here, talking some tariffs. We got our spaces starting any second here.
Playing from 87 GPGL3.
Now we're playing.
Oh, I don't know what
Great.
that one was.
That was my laptop getting connected there to the.
We're testing
Bluetooth
out some
speaker.
stuff here. We got 62 people of you guys in here hanging out. We're talking tariffs. We're talking about the stock market. Like I said, space is starting in 4 minutes. For anyone who doesn't know, if anyone is coming from the YouTube spaces, we do these live conversations every single Monday through Thursday, 3 to 5 p.m. Eastern. We have some really smart people on. We're going to listen to that live on here. We're going to also kind of be like, when someone says a stock, a chart, we're going to have Emp looking at it. Obviously, Emp's got a lot going on in the background. This is one of those things where we were just like, fuck it, we'll do it live, we'll test it. I'm not going to curse as much as I normally would through this. So yeah, we're just going through the phases. Hope you guys enjoy this. Ev's got the craziness in the background, but we get it. This is the work from home environment.
Sports.com strikes major deal.
Yeah, well, finishing up the kind of overnight piece of what was going on, we did have basically a double bottom that happened. If you see right around when London was getting fired up, woken up for the day, double bottom in this area. We moved back up, dip at the open, back to test that area. We had the fake headline, right, Evan? The 90-day pause on everything.
Let's talk about that quickly. Can you pull that up from at least part of it? Go to my timeline. I deleted part of it, but you can see if you scroll down a little bit. Doing a lot today, a lot of news. A little bit past that. So yeah, this is where it is. That headline is below. I screenshot it just so everyone can know that it kind of came out there. Scroll down.
There we go.
So that was that below one was the headline that came out. CNBC came out and said they posted it. They said it was from here. Someone else said it was from here. Someone else said it was from there. But the point is, someone tweeted this, someone posted about it. Then a major news organization picked it up, didn't fully confirm it, and then everyone else picked it up from there. Intraday, we were up like a couple percentage points out of nowhere. That was quick, and then seconds later, minutes later, the White House came and said, "No, this is fake news." So if you're looking out on that intraday one, if you want to also now go back over to the market, that's when you kind of explain the random text. That's kind of when you explain what was happening around that noon. I don't know what it was. That's that spike a little earlier. That makes sense. Say hello. I see a lot of people joining into the chat here. We got 81 people in here. Say hello in the live stream. I want you guys to say something, anything. Tell us what stocks you want us to look at. Also, make sure you're giving the live stream a like. Like this live stream. We're trying to test this out. Do you want to see us do more? Give this live stream a like. Let's test it out. Perfect. But yeah, say hello. Throw in some stocks you want us to look at. Throw in some comments onto what the other people are saying. Well, and let's continue on throughout the day because that was kind of the high sit-in for the day so far, and we've just been chopping about. Now we're on the higher end of that range. Maybe we're closer to half gap or something. That's what you could say as we head into the power in a second.
You can see on my chart here, previous day low is right here. So this red line right here is previous day low. That is where we had the bottom on Friday back over here. We got back up into that range a couple times today, but we failed to hold it. Honestly, QQQ is doing a little bit better. QQQ is sitting on Friday's low right now, and you see the same reaction here. Big spike. Oh, fake news. Come back down. Market just chops. You get a little push here late, and now we're trying to hold on to Friday's range on QQQ. Tech has been doing a lot better today, Evan, than a lot of the other, I guess, the broader market in general. I look across and I see, I have a watch list over here where I watch the top 10 of QQQ. Tesla is down 3% still, but NVIDIA up 3%. This is based on Friday's close, of course. Netflix is up almost 2%. Meta up over 2%. Broadcom up 4% today. Amazon up 2.2%. Apple, you mentioned this a little bit, struggling a little bit, down 4.4%. Costco. So for those that don't know, the top 10 weighted stocks in the NASDAQ is what I have here on this watch list, something I watch very closely. Just to see what QQQ is doing underneath the hood and and look at this as we're talking right here. Look at this previous day's low tested and being held. Look at this big pop we're getting right here live on the Spaces going into Stocks on Spaces. I'm going to open that up right now.
Yeah, go in, open that one up right now. Like I've been saying on this one, we're going to have a bunch of really smart people coming in here. We already got the first one, Emp, helping me with this one. But yeah, we're opening up that conversation, open up that Spaces right now. I'm going to go in and make sure we are moving on that one. But also, Em, can you see the live chat? We got a couple people talking here. Some of the people asking for stuff, obviously GME. Then Samarth wants us to look at VOO and QQQ as well. So there's a couple of stuff to go in and look at. And
Macro note, the Trump team considers an exporter tax credit to offset tariff risks. Just came across the squawker. I was muted at the time.
How loud is that background? Not loud at all?
No, it's not bad at all.
Okay, interesting. So we might keep ourselves through that. Spaces is starting up right now. Power hour is going, and just keep us up here with the big moves. We're going to start. I'm probably going to go over to options mic first, but we'll keep listening to this. We'll go through some of the biggest stories today. Give me a second, and I'll be back. Why don't you look at VOO and QQQ right now?
Give us 1 second here on the stream, guys, while we get live over on Stocks on Spaces.
All right. What is up, people? How are we doing today? You guys ready and excited for another day, another power hour in the market? What's up, Mike?
Hey, Evan, how you doing, bud?
Mute this quickly.
But yeah, crazy market. We got
All right. Give it 1 second here while we get spaces rolling, and we'll stay live right here. I do want to take a look through some of these. There it is. Let me hold on. Let me take a look at some of these. There's QQQ. Okay, so I see QQQ mentioned here by our friend. What is VOO and QQQ doing? I mean, this is a wild daily look when you look at this candle. I mean, RSI is absolutely in the dumps. If we zoom out and look left though, and let me draw this right here, and you see, and I can take this off for a second. This is the last high from 2021. We actually wicked into that and got bought up. Look where we opened today. If I zoom in on this, look at where we opened. I just drew that line here. You see where we opened? We opened right on this this previous all-time high. We wicked below it, but we opened right on it. That was the opening price, and that's pretty much been the base of the day. So that is pretty interesting to note there. See if I can get this. I wonder if we pick up spaces here, what it sounds like.
Market's going to focus on at this point. I don't know. I think we just kind of closed flat here. An honest answer. I think the market's going to try to hang here and see what we get.
Mike, what's worst case outcome from China in your opinion?
They say F you, go ahead and we'll retaliate back. And then they could go out, they could say, okay, we're no longer letting Starbucks sell in our country. Apple, you can no longer sell into our country. They can do anything like that if they want to.
And then what about we just did order of magnitude? What about second worst thing you can do?
They can kind of do another retake of what they did last week, where they increased the tariffs by 50% back against us. They put more countries on the, more companies on the list of, not able to do business or less business in there. That's probably the most measured response to something similar to what they've done recently.
What if they don't really add anything new, but just reiterate what they already said? Do you think that any of that's priced in at all?
That's a good question. I think if they do that,
All right, give me 1 second. You want to give me the first second?
Yeah, in a little bit. And I think the
Want to hear what just happened there?
If they don't.
I had a call come up. I also were doing this live stream. I'm also expecting to host the spaces. I just double booked a call. That was crazy. Yeah. So we can listen to the spaces a little bit. Feel free to run through some of the stocks he's talking about. Feel free to talk over him a little bit and jump in. I want you to look through, like, someone's asking about Intel, Home Depot. Sound is fine. Weekly charge. Like, you can see the live chat, right?
Yeah. I was watching the live chat here. I've got the spaces ready. We can play that as well. I kind of want to hear as people talk through any names or anything, but I know right now most of this talk over on spaces is going to be around, the tariffs and all the news that came out today.
All right, you can throw it on there. I just wanted to let you know that I am back. Sorry about that. We can jump into whatever. We can play the spaces again.
Offshoot or some incremental positive news to at least know that we can take a breath. I don't know if that's actually what we're going to get, but when you see reports over the weekend that, like, Trump's top economic advisor is negotiating and reaching out and discussing with over 50 countries is what the report is. I mean, these are extensive conversations, negotiating years and decades worth of, gamesmanship and trade. Like, these are not, hey honey,
He's underperforming today.
These very
That's one of them that's
difficult
down
and
4%. So
protracted
is Apple. That's
conversation.
outperforming.
So I think when you see a, you know, we saw the report was not real, but the 90-day moratorium. I mean, I think we just need to turn down the temperature of the room by.
You know, you look at some of the reactions here
Given the
that happened on that news this morning. Some have held in. Look at these daily candles. Look at Amazon holding it up here.
Wednesday.
So look at the difference in the size.
really
These
don't
upper
know
wicks.
Let's meet them
Some of
out.
these-
And let's
this
meet
is
them out
gonna
right now. And
go.
actually, here's what I want to do. I want to run through some of the big news stories. So let's just scroll through my Twitter page. Get that up, and let's start down from the bottom actually. And I'll be watching real time, see as if anything comes up. All right, we can start there. First of all, that one's actually interesting. Click into that one. This comment came out from the White House trade advisor Peter Navarro this morning. I thought this is interesting. A lot of you guys coming here from X. Peter Navarro picking a fight with Elon. Jeez. Picking a fight with Elon. I thought that was kind of crazy, you know. As we're getting to this point where we're looking for someone to blame. The entire market, everyone is looking for someone to blame. Even the people internally are kind of throwing around. There's a lot of commentary yesterday from our spaces that Howard Lutnick might end up being the one who takes the fall, but we shall see. I know it sounds like Peter Navarro wants it to be Elon Musk. So that was one that I saw. If you want to scroll out of that one,
You got rugged from Spaces, by the way.
I know that's fine. Yep. You want to get off the screen?
Yeah. What else did you want to go through? The panicking. This was interesting.
We can I thought it was hilarious. If you want to click into it, but Donald Trump making up new words now for Republicans that are panicking. Panicans.
Yeah, I like how he
Yeah.
right here in this piece he defined panicking.
I thought that was pretty funny.
Bear market.
Yeah, well, I think we've since gone up a little bit since then. Yeah, we obviously have. So I do not think we're in a bear market anymore. We'll see if that one ends up confirming in a little bit.
Let's measure it out real fast and see where we're at.
Yeah, measure it out. That I'm curious.
It's 18% where we're currently sitting at. The 20% mark is basically where we opened around 490. We'll call it 490 and change right there. So there's your bear market.
All right, keep going through.
Lowest level since February 2024. What else do you have up here?
Oh, but check out that heat map in the morning. Look what that. So this is what the market opened up right around the open. Even in the overnight session, I bought a couple things. Let me pull up what I ended up buying in my account. Investing history. The things that I bought this morning. So Robinhood, I don't know if they've always done this, but in the 24-hour single stock market, they didn't let me buy anything in the market order. It had to be in like a limit order. So I ended up putting in a bunch of limits for. This is like a lot. Okay, here we go. I put in Honeywell at $185, a little bit there, adding to my position. I bought some more VU at 442 and then 448. I bought Amazon at 161.50. I bought go on mute for a second. I bought QQQ at $400. That was actually one of the larger buys I ended up doing. VU at 442 and QQQ at 400 were the two ones that were the larger buys. I also ended up buying Tesla at 210. So I bought 2 shares of that one, 420. I thought that it made a little bit of sense on that one. I also sold one of my ETFs that we've talked about a little bit. I sold out a THTA this morning. I've been holding it for a while, and it was time to get out. That is collapsing. The whole risk of that one was a black swan event, and that is literally what we've been going through. I should have sold this one out a little bit ago, but I sold out of THTA. I'm going to be looking to deploy that in. Since we've been open today, I haven't bought anything. And like I said, I think we're going to close this day up or down by more than 1%. That's what this morning looked like. You could see Apple down 6-7%, Amazon down 4%, Tesla down 9%, or whatever that is. A rough morning there, and we can move off of that one now. But that was, and we've recovered mostly. Most of my portfolio is red a little bit right now, down 0.6%, 0.4%. But yeah, let's keep going through some of the. I want to see some of the other headlines we had today.
Yeah, I'll tell you what's interesting is I bought a little bit of stuff this morning. I bought a lot of stuff on Friday, and I'm up 0.5% today, believe it or not.
There you go. Bang bang. Bank CEOs met with a bunch of people together. I saw that there was something else to that headline, but I don't know. That one didn't end up being that huge. Keep going.
That headline I think ended up being later. Look, this is where the news came out, and in seconds we went from red to green. Look, at this point we were up 1% on the day. We're now currently down 0.2% on QQQ. So that's an interesting. This is fun to go back and look through as this day develops, and look how different this is compared to what we just looked at.
Yeah, that was that random pump up that ended up being fake news. And if you just keep scrolling a little bit, what the actual story is, we'll end up coming up there at some point. But we did get pump and dumped at some point today. The entire market as a whole. Good job, team. Chances of recession odds going up to 61% on the betting markets. Poly market has it up there.
I wonder if that's moved in today.
Yeah, where's it at? 62%, so still around there. Up a little bit.
It hit 60, 68. Let's see. Let me go to a 1 hour spot. Yeah, basically right there, 62 is where it's been sitting at all day. That's interesting. Still sitting right around that same spot, 61, 62. It was a little bit higher, I think, over the weekend. But yeah, that was interesting. Additional 50%. This was a big story that came out.
Yeah, what the hell? We're adding an additional. So what is this? 134% tariffs on China. I think that's what's happening here. Maybe allegedly. I don't know. That was a pretty big headline.
Yeah, I don't know
today.
what math they're using. If it's going to be 104 because they said 54 the other day, but they said additional. That's effective on April 9th, which is Wednesday. That's the day that all these tariffs around are supposed to go into effect.
I see we got some comments here. Crypto saying good evening, and then we also have Jacob saying, actually, Burga is the one I want to look at. Who do you recommend, or where should we look at news? Your Instagram is hella good. Y'all have a Twitter ? Yes, Twitter is actually where I'm a little bit larger on. That's the one you should be checking out. Twitter, same username, Stock Market News X, whatever we want to call it. All right, let's keep scrolling through some of this news, and then we'll see where the stocks on spaces guys. This was a meme that we can scroll through pretty quickly, but it's like, what happens if Robinhood tells you where you are in the pecking order? Next one, keep scrolling through too. Let's just go through their ones. We had BlackRock CEO Larry Fink. He was on CNBC. That first one was kind of stupid. I mean, obviously, I think the comments, the next couple are more interesting, where he's saying that he sees no chance of 4 or 5 rate cuts this year. The market is starting to price in 4 right now. He thinks there's no chance that happens. He actually seems to think that there's a higher chance of Jerome Powell hiking this year than there is a chance of him cutting 4 or 5 times, which is kind of crazy. And then the headline that I thought was the biggest was the one I included with the photo. That I see it more as a buying opportunity than a selling opportunity. That doesn't mean we can't go lower from here. Wouldn't rule out another 20% decline. There's no way you didn't hear that, right? That was loud. Sorry for the people with headphones. But yeah, you can continue scrolling. BlackRock CEO Larry Fink was on CNBC at some point earlier today. Yes, the stock market fear and greed index is at 4. I don't know if it can go lower or not.
Yeah, and let's take a quick look. Let me jump over here. We are pulling back a little bit here late in the hour.
Yeah.
Now down 1% on SPY. Maybe you're going to be right, Evan. But
actually, there was no way we were going to close the day, right? We're going to close the day. Maybe I should have even said 2% or something.
Yes, we're now down 1%. QQQ down 0.5% right here. We're losing that previous day's low. So if you look left over here, right where we finished yesterday or our Friday session at, that's where we're below. That's what this red line is marking us. Oh, just simple indicator just to kind of give a view of where we're at. And
you can add a little bit more if you want. We could try some of those ones. What level of trader are you guys in here? Let me know in the chat. Are you active trader? Are you just more of a long-term investor being like, what the hell's happening in here? I'm curious. So we'll base in the conversations, but let's keep going. This I thought was actually like a joke, but also kind of true. If you're a public company and you have bad news to put out there, if you're a firm or something like that, if you're a Carvana, this is the day, this is the week. I think this might be the time to take away all forward guidance. No one cares about anything that is not tariffs. Tariffs is the only headline that any market cares about right now. Also inversely, if you have a good headline, Today is not the day to go in and put that out there. This market is crazy. Very only worried about one thing. One headline only is going to move us both ways, up or down, and that is on these tariffs. So that was kind of a joke, but also very true. We can continue on.
Yeah, the only thing to keep in mind there is the blackout periods that a lot of these CEOs and companies are going to get into as earnings season kicks off, which kicks off on Friday, actually.
Best newsletter in the game. Now keep
Yeah,
going.
shout out
Keep
to
going.
the
Those
newsletter.
passing comment. This was one we could skip through. People didn't love it. It's how far we are in drawdowns. It might work actually well in spaces. Let's run through it a little. Click into the thread because it's going to come in better. And then, yeah, so Apple down 31% from its all-time highs.
NVIDIA's down 34. Wow.
Let's go power through. And then click
Tesla
in.
51.
Click on, I want to see both of them, yeah. Nice, that's what
There's
I
your
want.
shot of Microsoft. There's your shot of Tesla at 51.9%. Take a look at Amazon here, 27.9% at that drill down. Google about the same, 28.7. We got several here. Okay, the interesting one's going to be the one that we get to next. So 29.8% drawdown on Meta. How about Warren Buffett?
Down 10.
Just
Yeah, 9. Not even 10.
9.4.
Still green on the year.
Cash is king, right?
The Warren Buffett
Broadcom, big
post didn't go
drawdown.
well.
That's one of the biggest
Yeah, actually,
ones.
Apple actually fell below the price that Warren Buffett was selling Apple at last year. So that's a little bit of a flex.
Yeah, absolutely. I'll continue my way up here. I know Sam just finished up over there on Spaces. So, yeah, this was interesting. It was interesting seeing what kind of drawdown. Of course, Warren Buffett famously went heavy cash there early.
That headline, though,
next.
yeah, that was a big one.
European Commission proposes 25% tariff on U.S. goods. Now, one piece that I noticed on this headline, bourbon is excluded, Evan, so we're safe. Or I guess if you're in Europe, you're safe from your bourbon prices from the U.S. going up. But everything else, from what I saw, that was the only exclusion that they mentioned. May 16th being that date.
Yeah, I think the May 16th date was actually really important because that's like a month out. I think that's saying, hey, we're going to negotiate. We have plenty of times. The U.S. tariffs are going to be going into effect apparently on Wednesday. So they're giving themselves a little bit of time in that one. And I thought that was actually a big deal. And by the way, if you look back a couple months ago, we were talking about this on the Spaces. This was actually one of the things that Trump actually raised as a direct concern. So answering some of those, negotiating out a little bit. I'm intrigued to see how that one ends up playing out. By the way, if you're in here for the first time, this is the worst the live stream's ever going to be. 100%. We're trying to do more of these, and we're going to keep working on getting them better. We're going to have high energy. We're going to have no background noise. We're going to have the spaces in here in a second. This is going to be one of the best spaces out there. Guaranteed. We have the best conversations coming this way. We're also going to have some really good speakers. Make sure you are subscribed to this channel. Turn the notifications, hit that bell button on. Everything cool that we're doing, we're going to end up making sure we're posting here. So get subscribed to the YouTube channel. I thought this story was one of the more recent ones that came out that was also interesting, was Apple planning to source more iPhones from India. Let me pull up the WSJ article from this one. Here we go. It's the headline is Apple plans to send more iPhones to the United States from India to offset the high cost of China tariffs. Adjustments are short-term stopgap while Apple attempts to win an exemption from President Trump on tariffs. Yeah, shout out stock market news in the bottom. Why don't we get the first one going, Vista Shares. You guys didn't know we work with a couple companies. I appreciate Vista Shares. Interesting ETF. Whenever we go in and bring up some of these products, we never tell you to go in and buy them. We just want to put the stuff on your radar so you guys can go in and do it. But why don't you talk to us a little bit about Vista Shares? We got some AIS and OMAH, which OMAH is one that is holding Berkshire Hathaway's. It's called the Vista Shares Target 15 Berkshire Hathaway Select Income ETF, just as we were talking about Buffett before. But Em, do you want to talk us a little bit on this one? Maybe you also pull up the chart.
Yeah, let's see. Which do you want to look at, AIS or the OMA?
Let's look at AIS. But yeah, Vista Shares doing some cool stuff, working with the team. We appreciate them. Our goal, again, working with people like this is to just put stuff on your radar. But yeah, run us through AIS a little.
Yeah, I will say that AI is just getting started, right? We had kind of the initial hype, the initial pop there, but it's just getting started, and this AIS is basically built for stage one as this is getting going, picks and shovels phase of AI, if you will. That's where AI hardware has plenty of runway still. People are still trying to figure out like, okay, who's going to be building what, right? We know these companies, these big companies are absolutely spending hand over fist, and obviously we'll see if that pulls back any, but it's been absolutely hand over fist lately with this. So it is very interesting seeing the picks and shovels aspect of AI. So the hardware, there's, like I was saying, the demand for high speed connectivity, memory scaling, low latency data, these data centers, everything. Before AI reaches its full potential, the infrastructure is what's going to have to be built. So that's a lot what this AIS looks into. If you go to vistashares.com, you can see this. Please check out the prospectus. And you can see some of the notes here from VistaShares on AIS that talks about the kind of the thought process behind it, how to invest in this. Here's a nice summary of it. Instead of using my words, you could use their words. I mean, this basically the AIS offers investors a strategic avenue to participate in the artificial intelligence supercycle, reshaping industries worldwide. Through meticulous, actively managed process and rigorous rule-based methodology, AIS aims to capture the full economic potential of the AI supercycle, providing investors with pure exposure to the value chain, contributing to this transformative industry. That's what's really interesting. You can see some of the details, key information. It did find inception back on the 3rd of December of this past year, just a brand new type of thing. Obviously, the whole market's pulled back a little bit now, but if this is something that piques your interest, put it on your watch list. Maybe dig into it a little bit. You can kind of see some of the holdings here. Just take a quick look at this. You see, for example, Taiwan Semi is a name that most of you guys will recognize. MU, Micron, Intel, and NVIDIA, of course, has to be in this. But you see the weightings. It's not just straight NVIDIA like a lot of these are. So I thought that part was interesting, seeing what the different things are. But big shout out to VistaShares and AIS. We appreciate them. We're working with them. Hopefully that puts it on your radar.
Yep, appreciate you for going through that. And like I said, I'd say watch list maybe when we're coming out of this. Maybe now is not the perfect time for it, but we shall see coming out of this. Why don't you look through some of the market? Shout out to VistaShares though. AIS, OMAH is more the Berkshire one. We'll talk about that one maybe a little bit later. Some of the individual stocks though, as we're heading into the power hour, as S&P 500 does get closer to in 0.5%. I know some people were talking about Home Depot. Ev, you're a trader. Can you put the actually? Let's see this headline that I just got out here from Trump. What's this say?
We're having direct
Trump
talks
asked
with
about
Iran.
pausing tariff. Not looking at that.
I see several things. Trump welcomes Netanyahu to the White House for a meeting. They did say they were going to cancel the press conference, but I'm seeing some headlines around that.
There was
Trump
another
asked,
headline already that they're just going to do it in their thing. So he already talked about that.
Okay.
That was nothing.
He asked about pausing tariffs. We're not looking into that. Just saw that as a quote there, and we're having direct talks with Iran. Those are the last couple of notes I've seen out from President Trump right now, live off the wire here with stock market news. How about that? What a stream. What were you going to ask about Home Depot over here, Evan?
No, I was getting that headline out. So you guys have any stocks you want us to go in and look at and do some TA into? Appreciate you, Kolovin. Is that how you do it? Been following you on Threads, top tier content. Threads, we got some Threads people in here. Nice. I just posted a quote retweet on there of that one. So if you're in here from Threads, I think that platform has a chance to go. People are trying to join Blue Sky or something. I'm like, nah, go in and check out Threads. That one might have
Evan,
a chance there. What's up?
I have a special guest.
Who do we have joining in? There we go. What's up, Gov? Can't hear you.
I'm not hearing you, Gov, but you are here. You look good.
Well, hello there, friendly faces. Can you hear me now?
We got you.
Fantastic. Yeah, what a market. What a time to be alive. Got some more. Dude, does Trump just speak all day now? Is that just how it works? He just talks all day and we just get headlines every minute?
Stops.
Who's he even talking to? I'm just seeing people tweeting out quotes right now.
It's like I think the press is literally hiding outside of every door that he might come through, because like what I just saw a thing that he was welcoming Netanyahu. So I'm sure maybe at the welcoming, maybe he just threw out some, he's speaking from the side of airplanes. He's speaking from wherever he can right now.
Gerg just put out that tweet saying that Trump said he's not looking at any pause in tariffs. So that's one. I don't know how old that is. I think
that just came out right before you joined. You just mentioned that Japan needs to open up its nation. This is all coming out in real time. We'll keep our great relationship with Japan. Trump reiterates China 50% tariff threat in his current comments right now.
Yeah,
let's switch over to SPY on the screen. Curious to see what that's looking like.
I wouldn't be surprised if it fell off into the end of the day, personally.
They're saying I don't think we're going to open or close the day. I don't think we're going to close the day down. I think we're going to close the day down or up by more than 1%. I don't know what it is. Maybe it's shaping up to be the downside. I still think there's a chance we get some random pop last 10, 15 minutes, close the day up 2%. I think it might even be a 2% day. We got the VIX.
I just don't see what would buoy it to the upside.
Where's the VIX?
I think
the
there were
market
two.
wants it.
I think there were two things.
The level of bearishness was also a lot, but yeah, continue. Sorry.
I think there were two things that drove us to the upside today. One, obviously, was the fake news story that got distorted out of the White House regarding, a delay. And then the other was simply just too heavy of a sell-off, and I think smart money coming in and pushing us back to the upside. But both of those things are in the past now, right? The smart money came back in and we ran back up. Qs were down 5.8%, and obviously, by the open they were only down 3.4%, and then even after that fake news came out, we were, even max drawdown was less than 2%. So I think that the smart money's come in for the most part, and then the news story, right? And that's in the past now. That was happening all the way back at like 10 a.m. And so what is going to push us up that we would be up 2% at the end of the day? I really don't know at the moment. You can only see, for the most part, what I think people would consider negative news since then, and the price action is nothing crazy since then. I mean, he's, I've just got it up on a screen. You can see for QQQ right here, which is what I'm talking about. It would seem like we would just stay either in range, or I would predict. I think it's a bold prediction.
Yeah, we're sitting right on VWAP for the day.
Yeah, I would think we would stay on VWAP personally. I think we would close nearby it, potentially slightly underneath it. They do love to close us right under VWAP these days, just scare people a little. All right, that's my rant. I'll be back in a little. Thanks for having me.
Appreciate you joining. And as you say that, we hold VWAP right on SPY. So we'll see what happens here. This is, it's wild times, right, across the whole market, Evan. That's one thing. If there's one thing that's certain, this is kind of unprecedented, I think. I'm still seeing a lot of Trump headlines. Are you seeing those, Evan?
Yeah, I'm seeing a couple of them coming out. Feel free to share your screen or whatever if you need to. We don't have to. Every nation will get a fair deal. If there are no fair deals, nations can't participate in the U.S. Tariffs could be permanent and could also be talks. What's this one? We will talk with China. The tariffs could be permanent. Interesting.
Big meeting between the U.S. and Iran on Saturday. We will also talk to China. We're going to get fair deals with every nation. If there are no fair deals, nations can't participate in the U.S. That's wild.
Yeah. Countries are coming to the U.S. for deals, but I think it's basically tariffs could be permanent. We're looking for deals.
Looking through some of the different names here on my watch list. Kind of want to see what's up on the day. What's showing some strength in NVIDIA also, obviously up. Broadcom is up a little bit on the day. Actually over Friday's high right now on Broadcom here. We haven't really gone anywhere outside of tech. I noticed Walmart was green. That makes me happy as a Walmart shareholder. What else is moving? Some banks here. JP Morgan. Earnings on Friday morning before the open. JP Morgan up 1.8% right now. It's been hanging out basically in Friday's range. You can see the low and the high here pretty much just chopping in Friday's range here, but reclaiming that at least is a decent sign. Bank of America up 3% today, also at basically at highs of Friday. Having trouble getting over Friday's highs, but right there. Uber green today. So Uber's one of those that you think about when you think about something that doesn't have any type of tariff risk. I mean, yeah, everything's got some risk market-wise right now, but no tariff risk right now at all. And sorry if you hear my kids yelling. They apparently left a toy in my office at some point, but that's always fun. Palantir, another big name, especially the last 6 to 12 months. Big name here. We're up 4.7%. Now this thing's been absolutely beaten up. I mean, you don't want to look left too far, but hanging in there a little bit and doing well today, up 4.75%.
That one last night was down like 10% or something, honestly. That was crazy. These moves have been
Yeah,
wild.
and look at Robinhood too.
Well, so I got Amazon last night. Robinhood is what's the move there? Where are we at?
We're back up to 35. It was at 28 last night, or actually, it may even lower in the overnight trading. But I do have it here.
We are pumping a little.
28.
We are pumping a little bit off this last set of headlines here. We'll get stock talk talking. By the way, tariffs could be permanent. We are trying to make deals. Have a great relationship with Z. Hope it stays that way. That's some of the commentary coming out right now. Trump speaking this moment in time. That is what's sending spies, cues, up, down, left, sideways.
One of the stocks that stuck out to me that's doing the best today, HIMS. You looked at HIMS and hers.
What's it doing? No, what's it doing?
Up 7.5% today.
See, how do I see any where it says
look,
percent?
it got over
down there. Okay. You got squint, love to zoom.
Yeah.
Got it. I see it though.
That's about as far. I mean, if I zoom in any further, it gets really distorted here.
Yeah, at some point, this thing isn't just made for it. Trading view's not made for streamers.
No, it's really not. But at the same time, you can see previous day high right here, this green bar with the label here. So that's Friday's high. And we look at HIMS on a daily chart over here. 200-day moving average right there. Been absolutely brutalized off the top. But you look left, you look at some of the support, and you see what it's coming off of. It's not a terrible look on HIMS. And breaking over, filling the gap and holding up here is not a bad sign.
I think they're talking shit about me.
I think they were talking some trash about you over there. But look at it. Yeah, DraftKings as well is something I've kept my eyes on. I'm trying to find things that are up nicely today, recovering over Friday's highs. I think looks really good. So DraftKings is one of those names. Dell is at Friday's high right here. It's been major resistance, but those things doing well. Now there are some things not doing so well. AMD is down again today. No relative strength in AMD. Poor Lisa Sue. We're down at $83 a share right now on that. Rivian red today as well. Not terribly red, but a little bit red. But just interesting looking at things that are performing and outperforming the market. You also see Bitcoin is slightly green based on the close, which is later than the market close, but slightly green there. MSTR, though, on the other hand, MSTR trying to hold in on Friday's low, but still down 6.3% over here. Coinbase, another crypto name, down about 0.7%. Airlines are all green. I see On, my favorite shoes, green today. Not quite to the previous day's high, but boy, they had a rip when they got a headline on Friday, and it's trying to get back up there. That one's interesting. And looking at, look at our sectors. When I look at the sectors down here, SMH, so this is your semis. Your semis actually are leading today, 2.5%. The leading sector, SMH, that is kind of interesting. It sticks out to me a little bit. Communication stocks, nothing exciting over here, but they are green. XLF, this is your banks. Your banks are green slightly, just barely, but slightly green there. And then tech as a whole outperforming the rest of the market today. A lot of other things still getting beat up. So consumer discretionary, XLY, that's down. It's under Friday's low still. Real estate, staples, materials, some of these other things that were doing well the last few days as kind of safety plays. Also getting hit today as well. Let's get back over to QQQ. There's a whole lot of headlines coming out from Trump right now, actually. Let's see, what else can I find over here? We're dealing with Iran directly. High-level discussions with Iran. That's interesting.
You can throw in
Trump
the
on-
spaces. We're actually talking now about
Okay.
this the headline that came out earlier. People are blaming it on Walter Bloomberg, which is interesting. They're saying it came from him.
I think it was just quickly dismissed by the White House as the old fake news.
But it does show you what the possibilities are, just in case. And my take on this, that had to have been discussed at some point in time for this to actually happen.
You're saying like a potential leak, see what's out there?
I think Fox News. It just so happened to be Fox News. That's a little convenient.
Yeah, I've done a bunch of TV hits for Fox News. They're okay over there.
Never mind. We
I'm
switched
not
the
saying
conversation
they're not
quickly.
okay. I'm just saying.
I also want to get over to
Was
Jeff.
it
I'm excited to hear what Jeff has to say.
Yeah, right into some Fox News discussion. That's always an interesting one to hit. Here's Jeff.
On a Wall Street guy, where he was basically saying that it was Ackman's recommendation that they have an egg.
No, this is Jeff. Sorry, Jeff. My bad. Keep going. I apologize.
No, my bad. Didn't announce myself.
Wrong one.
That it was just the
Jeffrey
Ackman
Hirsch. Anyone who doesn't know, this is stock traders on my. I totally
to
commented on
take the
you
pause
here and then did it
that
on the live
was
stream.
flipped to
on
be like
Spaces.
they're going to do it. It was just
We're cooking
probably
with
either
gas.
somebody short covering or whatever, or just basic, telephone line rumor mill type of stuff that got there. And as for Kevin Hassett, you remember this man as the author of the 1999 book Dow 36,000, which I jokingly suggested to a colleague that he may well be right again a second time after being so epically wrong the first time. So I'm not sure how this guy got into be the director of the Council of Economic Advisors or whatever one he's on after his totally flawed premise in his 1989 book based upon the last 7 years that we were going to hit Dow 36,000, in 7 years after 1999. So I took him to task in my Super Boom book where I accurately forecasted Dow 38,000. So I'm also looking at, if I could just dive in, I was at a conference down in Florida in November, and Steve Moore, one of these advisors of Trump's over the years, he has put out a book with Art Laffer, The Trump Economic Miracle. And I just cracked it open. I'm reading the premise. And they're saying that when they met Trump in 2016, Larry Kudlow, who interestingly is not part of the economic advisory group now, who always seems to have some credibility and sense to him. He said a few months earlier, this is back in 2016, Larry Kudlow and Steve Moore penned a piece in National Review called Smoot Holy Trump, arguing that Trump could wreck the economy should he follow in the footsteps of Herbert Hoover, the last and disastrously protectionist president. Hoover signed the infamous Smoot-Hawley tariff, the bill that exacerbated the Great Depression by inciting a global trade war. So just some of the things we're looking at here, probably not at the bottom. People are looking for technical levels. I think, I don't want to use the word I think. I don't know is the real answer. No one knows. The technical levels are pretty moot right now. I mean, yeah, we're looking like we're off those just under 5,000 levels, but buckle up is basically my advice to everybody. Thankfully, our stops got us out of some things, and we did have our seasonal sell signal last week. Hard to get out of that stuff in the downdraft, but
I've been talking about down Q1s being troublesome looking forward. The patterns of post-election years being the most troubling. I flipped my worst case scenario to about 50%. I'll probably get some bounces here, some covers, but there's an old quote from a friend that bear markets are like watching, or they don't go straight down. They're like watching a basketball bounce up and down a rock-strewn mountainside. They go up, down, sideways, all over the place. So the world's changed in a couple of days.
Hey Jeffrey, just
Yeah.
as a technical thing, we bounced off of the prior highs from 2021 on both the
Wanna pull that up?
S&P and the Nasdaq. So just a
Prior
technical
high
bounce.
is S&P 2021.
If it
Initially,
doesn't,
yeah.
it's trouble. Yeah, but if it
Yeah,
doesn't, it's trouble.
We could go back. I mean, my partner and I are talking about, you want to go back? You want to go big? Go to the pre-COVID highs. It's like, what, 3380, 30? I mean, there's not a whole lot of support between here and there or anywhere right now. But yeah, we bounced off that 23. That was one of the lines that Carter Worth had drawn up there on the CNBC chart stuff. But
yeah, just prior highs. Below that, you got a 200-week, 47, call it.
There's issues when they start flipping from the 200-day moving average to 200-week moving average, right?
Well, the week is important too because it's right in line with the pivot it had when it first started to fall apart in late December, early 2022. And then beyond there, you don't have anything until you get to 4,100 for a blip, and then you got 37, 33, etc. So yeah,
I had an uptrend line from the April 24 low through the August 24 low that just blasted right through. So
100%. I'm just pointing out that was like the level we bounced at today is basically like the saving grace, and then there's only one level below it. Outside of that, then it's just buckle up.
There's some things that I'm working on here that I'll be putting out for subscribers about waterfall decline. We're looking at this 2-day drop that everyone's looking at. We're starting to see, when you have the Sunday night specials on Bloomberg and CNBC, wherever else, you're starting to get there. But the sentiment just started to turn. So,
Jeffrey, one thing I will say, we were live on Spaces last night. We're not normally live on Spaces last night.
Yeah.
We had 3K people in there.
Awesome. Yeah. I played golf yesterday.
I was one of them.
There are signs though.
I'd like to ask if any of the fundamental folks, I think the anticipated earnings for the S&P are like $280. I don't think we get there.
A little
anywhere
space
close.
exception. I talk on there. I talk on here.
My estimate that I'm kind of looking at is like 235, but I don't know what that would put on the S&P at if we were at a 15 multiple. Is there anybody fundamentally sound that does those kind of estimates that you guys know about?
My friend and old friend Sam Stovall, I had him on my podcast on Friday. We haven't put it all out there yet, still editing it, but he was talking about that recessions begin, average recessions begin with the S&P PE of 15.6, and we were still up at 23, so plenty of room to come down there. There's just a lot of scrambling for fundamental technical sentiment indications of lows. And I mean, people are asking me, does the market make bottoms on Fridays? When people stop asking, is this the bottom? That's when you got a bottom. It's just everyone's still looking for that low.
So the question you asked, based on where earnings are at today, and just assume there's some sort of drag, just light drag, without knowing what the real numbers are. That 15 multiple puts you at 3,300. But
there's that number down there. There's that 300.
33. But the reality is that a lot of these earnings are going to get revised. I think, unfortunately, with some of the bigger ones, be having such high multiple expansion on low growth, that number could be the number you gave out to be conservative, which would be who knows, right? But
keep in mind too, we've seen net downgrades every single week this year for the S&P. So the problem though is those are downgrades for the first quarter. Once the banks are It's either later
I'm
this
looking
week
on the
or the beginning of next week. I can't
low
remember.
tree
But
right
once
now.
these
No
banks
52
start reporting,
guys. Couple 52 close though.
I think the next thing, the next perhaps shoe to drop would be a scenario in which you start hearing from multiple companies. Not only do they perhaps guide down, but perhaps even worse is they just remove guidance altogether.
This is
Right.
who's currently talking.
What
Something
CEO
along
in
the
there?
lines of there's too much uncertainty. The pieces
They're all-
are
everyone's
moving
getting
around the
lower.
board. Sorry.
It says, why
You know
would you
that-
even give forward guidance? Yeah, why
The-
would any CEO in their right mind give guidance right now?
Well, the
But I think
They
that's
kind of have to on a call at some point, but
yeah, the comment he just made is from the space you guys had last week is Dan Niles' opinion, where they'll probably remove guidance so they don't have to be held to a
One thing that I would say, the market does not care about anything right now except for tariffs.
Yep.
If I was one of these companies, if I have bad news, I'm posting it today. I am
That is
actually
100% correct.
probably what are you saying?
only tariffs matter, 100%
You're
correct.
saying
I think
that
that's incorrect.
the market only cares about tariffs. You're
Right now,
100%
at this
correct.
point in time, yes, that is all the market cares about right now.
We got Tom Lee giving out a mea culpa. I mean,
We
you
had
know,
NFP on Friday, no move. We had
Ed
looking at
Danny's
CPI,
done
no move.
lowered everything.
This market only cares about tariffs right now, for better or for worse. Obviously, earnings and everything matters, but tariffs headlines are going to move us. I think if I was a headline, I'd slip. If I was a company with a negative headline, I'd slip it right now. I would maybe even remove my guidance right now above what I think is going to be every single company removing their guidance this quarter. Apple's not going to tell us anything, that's for sure.
new tariff top iPhone coming.
Yeah. Stop trading. unless you can trade up and down with these things. I know there's people that day trade as
All right, let's get stop talking.
That's not my
Right?
game, so
That's what I was waiting on.
that's I think the only
All right.
people that are gonna.
All right.
Anyway, I'll be quiet.
I appreciate you, Jeff. Definitely make sure you're going in here, following the speakers. Appreciate everyone. Stock talk.
Stock talk.
It's your time.
Thank you
It's
for your time.
the daily round. We got 11 minutes to close. I don't know if you made any moves today. And then what are you watching in this market? I am so sorry. I forgot to get on the live
What's
stream.
up, guys? I did do a little buying today, actually. I
All
bought some
right.
Amazon leaves, 2027 leaves.
Go.
But not in an incredibly big size or anything. But I did take some nibbles. I mean, at this point, am I very, very negative on the macro situation? Yes, I still am, as I've been talking to you guys about for the past couple of weeks here. But after a 3-day historic sell-off, I mean, the probability for a bounce is probably improving. From a mechanical standpoint, I will say today's bounce was pretty pathetic. Like after a 2-day sell-off like we got Thursday and Friday, you would have expected, if we were going to go red to green today, to be able to get 2 or 3% of upside on the indexes and hold it. Even if we were going to give that back tomorrow, that would have been a little bit better to see from the enthusiasm standpoint. But like, what are we barely holding green or actually red here to the close down about 0.8%? I would have liked to see more enthusiasm behind the bounce. That wasn't exactly confidence inspiring, if you will, from a technical standpoint. I mean, we just have so much work to do on the daily chart for SPY to get back above the moving averages that it's going to be really hard to look at any bounce in this market and just chase it. It's going to be really hard to do that. And I've mentioned this before, but the way that I trade, the style that I trade, I don't intend to catch the bottom. In fact, I will not catch the bottom. But what I want to do is be able to put size back on the long side when I feel like the technical structure is starting to repair. We are a long, long, long way from that. We would need like 3 weeks of very green action to rebuild on the daily on SPY at best. Maybe you could do it in 2 weeks, but it'd have to be a face-ripping move. The 200-day moving average in the S&P 500 is all the way up to 570. We were there a couple of weeks ago, and now we're obviously a lot lower So it's going to take some work to get there. I mean, we had a nice push this morning, got up all
And
the way to
boost for
like
the market a little bit.
920-ish.
Let's try and
It
keep
seemed
it
like
going in
maybe
the
we'd
last
get a
5 minutes
breakout
here.
back to the upside and a little bit of reversal. We didn't get that. So that was, again, a little disappointing. But
It's a game of
on an individual stock basis, there's names like Amazon that I'm like, okay, look, if I nibble on a couple leaps here, Amazon goes a little lower, nibble on a couple more, I think that'll be fine. So I did do that today. Some of the 200s for June 2027 is what I got. Outside of that, I didn't buy anything. But I did notice, again, I talk about this a lot. The way I look at markets is different than the way most people look at markets, because I don't look at markets in a sector view. When you hear a lot of market commentators, they'll talk about like, oh, XLV is up today, healthcare getting a bid, or XLE is down, or oh, we're looking at a rotation into healthcare, energy, or whatever. I don't look at markets in that view because I'm a long short equity trader, and so for me, the alpha's in the industry action, not in the sector action. Because when you see the sector outperforming, usually, it's not always the case, usually there's a sector or two sectors or three sectors, an industry or two industry or three industries within that sector that are leading that move. That's typically how it works. And so for me, I look at markets on an industry point of view, and that gives me, I feel, a better ability to find market-leading stocks and relative strength stocks. So I have like a basket of how many stocks are on there right now? 998. There were actually like 1,100 on it 2 weeks ago, but we'll cut it down significantly. There's 998 stocks on the list I have right now, and they branch out of 20 industries. And I look at them every day. And part of the reason we got defensive at the end of February, which ended up being perfect timing, that was like a day away from the top, was because a lot of times this individual stock action will give you, I don't want to say a clue, but it'll give you a perspective on market attitude. Prior to the big drop off in the indexes, which started on the 21st, there was a lot of obvious deleveraging action, at least in my view, was obvious in individual stocks. And the moves down, you were seeing like on 0.5%.
Trump just said he's not doing the tariffs with Russia because we're not doing business with them.
I'm talking about between
having direct talks with
and
Iran.
Feb 20th.
Okay.
The moves down you were seeing in the S&P 500 were pretty muted. They were like 0.5% down, 0.3% down, but individual stocks, including Mag 7 names, were dropping 3%, 4%, 5%. That to me was concerning, especially when momentum leaders of the market, favorite FinTwit names, your popular retail names, were getting clobbered on very, very little index pressure. That was a sign for me to get heads at that time, and we did, and it ended up paying out well for us. But I'm starting to see that action now, a little bit of that action on the flip side, where a lot of individual names are failing to respond to market pressure. Like on a day like today, you would expect mostly everything to be red. In the pre-market, it was. And intraday, we got that down, started reversing. But as the action, a lot of stuff found its way continuing to the upside, a lot of individual stocks. And like now, looking at my list at end of day here, obviously, we're not nearly as deep of selling as we saw this morning.
In the background,
there's a lot of names.
I think we're red tomorrow.
Is that starting to show that maybe
you're in the chat, green or red
exhausted here? Maybe.
What do you guys
But
think?
again, we
Green
have
or
a
red
lot
tomorrow?
of work to do on a technical basis. So
Also, if you're seeing this,
we're
not
sort of in
subscribed,
no
you're missing
man's
out.
land here, where yes, we're very oversold, and as a product of that, you probably are going to see a monster counter trend rally at some point soon. I don't know how much long this downside can continue. Like we can only get a couple more 4 or 5% days before it's literally like you're going to be out of sellers. So I think we're getting close to a local bottom for a counter trend rally. But I mean, rewind the clock. Like last night, Jag was on our space. He brought up the .com bubble and all the counter trend rallies. You don't even need to go back that far. Just go back to 2022 and look at the action there. Like, I mean, pull up a SPY chart. Anybody in the audience can do this. You go back to 2022, you'll be like, oh shit, that looks hard to trade. And it was. Because when you get these massive drawdowns into a bear market territory where we are now, or where we were this morning, I should say. We're not anymore in the S&P 500, but broadly in this 15 to 20% off all-time highs range, you get really choppy action. And you get massive 10, 12, I think even in 2022, we had a 13% counter trend rally. And I'm talking about at the index level. You know, do you know what a 13% counter trend rally looks like at the S&P 500 when people are massively short a bunch of the individual names? It looks pretty explosive. You know, it looks like 3%, 3.5% up on one day, individual stocks up 5, 6, 7, 8, 9, 10% a pop, and you continue that for 3 or 4 days, people start to think it's a bottom really quickly. You know, people are like, oh, wow.
This is what he's talking about.
Everything's going up now. Like,
this rally.
This is it. We've been oversold for so long. This is your rally. This is the bottom. And they buy it up, and then they get stuck. I mean, that's precisely what happened in the first 3 months of 2022. You had selling, people bought it back, counter trend rally up 9%, boom, back down 12% to new lows. Same thing happened going into the summer. You had an 11% counter trend rally to the upside, boom, back down to new lows. And before you know it, peak to trough, and we're down 27, 28% on the S&P 500 in 2022. So is that going to happen again? I don't know, but to kick off the year, the action's pretty similar. And if you look at the news cycle and you're looking for hope, which a lot of people were, I mean, people were kind of like confused as to why we got the big sort of gap down in pre-market this morning. I don't think it was awfully confusing. I think clearly market participants were looking for some sort of positive news inflection over the weekend, especially considering we closed right around that 100-week moving average on the S&P 500 into Friday. It was kind of giving bulls a glimmer of hope. Hey, maybe they save this here at the 100-week, and we get some news over the weekend. Obviously, we did not get any positive news over the weekend. That led to the pre-market sell-off this morning. And on a mechanical level, we bounced
Trump
back.
also just said, we're meeting with Russia and Ukraine, and we're getting sort of close.
Headlines.
Virtually every nation wants to negotiate on tariffs.
Ask yourself, is it
and I can't tell you
situation
where the Saturday meeting is with Iran.
You know, people keep referring to these tariffs like, oh, it's tariffs on everyone. That's why it's so disastrous. I actually don't agree with that outlook at all. I don't think the market is panicking because it's tariffs on everyone. I think the market is panicking because it's very high tariffs on China. You know, I don't think the market is awfully concerned about tariffs on Cambodia or Vietnam or even Japan, frankly. And yes, there are economic implications in all of those trade relationships, but not disastrous economic implications. With China,
ding, ding,
30 or 40, or even with Trump saying
50%
tariffs, they're all
officially closed red.
Not just for us, not just for China, but for everyone.
0.18%. QQQ officially closed green.
I think that's the difference, is that the rest of this is really just at the periphery. I don't think people care about the Penguin Islands or these other smaller countries, because net, first of all, those countries do not have the means by which to negotiate, and many of them will come to the table. Many of them have already come to the table. You heard Netanyahu's comments this morning. Israel will do anything. We'll cut tariffs to zero. Vietnam said the same thing. Japan, I imagine, will say along the lines of the same thing. You know, they have a long history of selling legacy products to the United States, and those companies probably won't do very well in a scenario where they can't. And so the United States has an enormous amount of uplift. They do want to have one. It'd be like a one-punch knockout fight. It wouldn't be an entertaining fight. So the real issue for the markets is what happens between U.S. and China with trade tariffs. And 34, 40%, 50%, these are untenable numbers. And today, Trump on Air Force One was asked, hey, what do you see about the China tariffs? Like, what are your thoughts on China tariffs? And he said, well, if China doesn't take off the retaliatory tariffs by lunchtime tomorrow, 12 p.m. tomorrow, then he's going to impose an additional 50% tariff. Now, he's made this threat before, but he made it again today. So he reiterated the threat today. I don't know if he's serious about that or if, again, he's just trying to play hardball, but it doesn't seem to be working with the Chinese. I mean, even this morning, China's foreign minister said, look, like, threatening us is not the right way to do things. And you had a quote last night in China Daily, which is a propaganda publication published by the CCP, where they basically put out policy statements. They had an article last night saying China's willing to take its gloves off in a trade war with the United States. Well, we better fucking hope they don't do that, because
Sometimes the world just needs to stop talking people around.
inflation. I don't say winning. We just started making progress on our
Mostly
inflation
Green
the
Day
last
for
6 months
the
or so.
Max 7, by the way.
And now you have to throw a wrench in the mix where basically every single basic good will go up in price in the short term, and significantly. Not to mention the automobile tariffs and steel tariffs, which are going in place. Every car is going to go up in price $5,000 to $7,000, like in a snap of a finger. So the amount of pressure that puts on the American consumer is probably untenable where we are now, considering, the Fed has already started considering the other
I'm
side
watching
of
the
the
news
labor
wire, by the way.
market.
I don't think we're
People
getting
are
any
starting
headlines.
to talk
Probably
about
watching.
consumer debt, consumer leverage, and
Yeah, I've got to
how
pull that
stretched
here
the
too.
U.S. consumer is. And you want to do this now, at this point, and forget about the U.S. consumer. The Fed's between a rock and a hard place too. You think the Fed wants to cut rates here? No, they don't want to. They will if they have to, but they don't want to. And they look at the mistakes of not just the Fed, the global central banks, looking at the mistakes they made during COVID, and you're like, okay, what if you do get an economic slowdown here? Are you really going to get the same level of policy response that we're used to? Not just from COVID, but from the last 4 or 5 recessions, right? Because if you look at stock action preceding those events, especially COVID, and you look at the V-shaped recoveries, we talk about market conditioning over the last 2 or 3 years. I talked a little bit about that a couple of weeks ago, and how retail traders have been conditioned to buy the dip and how it's unhealthy and yada, yada, yada. Talk about conditioning over a 20-year period when it comes to fiscal stimulus, when it comes to monetary policy easing, right? It's not just retail that's conditioned to that part of the story. It is the entire street. And so if we come to a scenario where we do get a recession this year, we do get a big economic slowdown at the end of the year, and God forbid inflation is still high at that time, because that'll really complicate things. But if we do get a recession at the end of the year, are we going to get the same policy response we've been used to the last 4 or 5 times? Are we going to get a Fed that cuts interest rates to zero and a federal government that begins throwing out stimulus checks? I don't know. And I think that's the bigger overhead risk here, is that the situation doesn't improve with China. We do go ahead with 34 or 54%. I don't even know what the actual number here is, which is part of the fucking problem. It's the lack of messaging. Whether it's 34 or 54%, we go ahead with that on China. China does it back to us. Global economy crashes. There's no alternative outcome there. For anyone that thinks otherwise, I would love to hear your argument. But if China and the United States put 30 or 50% tariffs on each other, it's game over. Everyone goes into global recession, and then you, again, historically have to stimulate and have to ease monetary policy. The question is will the basic goods inflation that's coupled with that economic slowdown prevent us from doing so? Will we see a 0.5% uptick in core CPI and PPI into June or July of this year, which then holds the ability for central banks to do anything about an economic slowdown? That scenario, stocks would go down a lot more than they are. This would look like, I think, a blip on the radar if that happened. 10, 15, 20% correction. That's the type of stuff that can lead to a really, really brutal bear market. So I think that's the worst case scenario. It's not my base case scenario, but the outlook for China and the United States negotiating, is there anyone that's positive on that outlook? I'm not. China doesn't seem to be willing to come to the table. All the commentary is pretty negative. And so that's my concern here. I think we will continue to see negotiation and deal making and maybe even zero tariff policy between countries like Cambodia and Vietnam and Japan and South Korea. These countries will come to the table. They'll come to the table quickly. You probably broker deals with them. The issue is none of our relationships with any of those countries are existential, but our relationship with China is existential for the global economy. So that's an issue that kind of remains at the back of my mind. I think that's probably the biggest problem to be solved, and I think it's also the hardest problem to solve. I think you'll get a lot of fodder headlines in the meantime, where you get stuff that was like mentioned today, where Netanyahu's in the White House and he's like, "Oh, we're going to cut tariffs." Like, our trade with Israel is not a point of global economic concern. Nor is our trade with Cambodia. Nor is our trade with Vietnam. These are not like we're going to unravel the global economy if tariffs are put in place in any of the circumstances. So I think that distinction is important to understand, the difference between China and the rest of the world and the dynamics of trade. And I also think it's important to have some sort of opinion on what you think the likelihood of that resolution is, because I think that's the best way to stop the sell-off. And I think if you want to produce a sustainable balance in these markets, I think you need to solve the China issue, in my view. Because this is a global trade war without everyone else. Even if it's just between the United States and China, it's still a global trade war. And so that's the problem here, I think. But yeah, added a little Amazon today, took a little nibble, nothing huge size-wise, but I will add more if we continue to go lower. I think mechanically we're very, very oversold. We're actually historically oversold on a mechanical basis. For a 4-day sell-off, it's about as bad as it gets historically. You can find very few examples where it's worse. And so, I would like to guess that there's better news coming just from a technical standpoint to produce that bounce. But today was not very confidence inspiring. I was honestly expecting a lot better news over the weekend. I thought they would panic at this point, and they didn't. So maybe Trump just doesn't want to blink, or maybe he really doesn't care what happens to the market and the fallout of this. It's one or the other. Either he's trying to play hard line, hard ball, and he's like, look, I'm not going to walk back, because if I walk back, then my leverage becomes much less effective, which is true.
I still
but
I still haven't really heard Trump walk it back. Some of the people around him have started to maybe be a little bit more dominant, but Trump, I still hasn't.
Yeah, his ego's too big to walk it back. As is President Xi's ego. I mean, to become the president of the most powerful nation on earth, you probably have some level of ego. I think most presidents that we've had have had ego. You're the president of the United States of America. You're the commander-in-chief of the military. Like, you have to have some sort of belief and confidence in yourself, and maybe sometimes that bleeds over and translates to ego. But the point is that there are a lot of egos at play, and that makes resolution complicated, because from us as onlookers, like all the stuff we've talked about in these spaces, like we are all trying to be reasonable here. We're like, okay, what's the practical way to do this? How do you do this over a longer time frame? What sort of rollout should be put in place for the tariffs? Hey, let's put out specific benchmarks by which tariffs can be reduced. These are the types of things we've talked about, because we're trying to be analytical, reasonable people. The problem is that when egos are at play, a lot of that reasonability goes out the window. And this is true in everyday life, and it's also certainly true in geopolitical life. But when somebody has that about them, and most world leaders do, and you do something like slapping tariffs on, and you're like, hey, don't fucking retaliate or it's going to get worse. Like, it's almost like a challenge to these guys, It's like, oh, okay, really? You don't want me to retaliate? I'm not allowed to retaliate. We're allowed to do whatever we want. Don't tell China what to do, Don't play tough with China. Don't threaten China. These are exactly the type of remarks we've heard out of the Chinese government, right? Sounds like two high testosterone, high ego dudes just going at it, which is exactly what it is. It's the two most powerful nations in the world that are like, neither of them want to blink, and neither of them want to make concessions, and neither of them want to appear weak to the international community. It's like the two captains of the football team, and everyone else is like standing around watching them. Right? There are impressions to be made from this. The European Union is going to have impressions about China and the United States and the fallout of this. Africa and Eastern and Southeastern Asia are going to have impressions about the United States and China coming out of this. And so the world's eyes are kind of really on Chinese and American officials right now, in my view, saying like, hey, who's gonna cave first? Because somebody has to. The global economy does not work with this arrangement. It just doesn't work. The gears don't turn. You will effectively halt like 30-40% of international trade, and you'll put a massive tax on the rest of it. And that is an economic destruction scenario. I know Dan Ives on Friday, a lot of people thought his comments were hyperbolic, but I agree. It's like self-inflicted economic Armageddon if it goes forward. I just, again, I guess it's the optimist in me or the hopeful person in me, but I think because of that practical reality, because the world economy, this is an untenable thing for the world economy, that makes me hope that people will come to the table. That fact alone, right? That people are going to be reasonable enough to see that this is not going to work. And as a consequence of that, they come to the table. That's my hope. But I mean, the news cycle hasn't exactly given me confidence in that. So I don't know. You know, I'm a kind of a confused sort of guy here where I'm not sure what's going to happen. And as a result of that, I'm not super confident in deploying all my dry powder. I have plenty of dry powder. We raised a lot of cash in late January, early February. We hedged well end of February. So my portfolio is in a good position right now, considering how big of a drawdown we've had. And I'm willing to be patient here. You know, I have a cash pile that gives me flexibility if I do want to start picking up some things. Like I said, I took some nibbles today on those Amazon 2027 leaps. I'll probably be down to buy a few more of those over the next couple of weeks and months. But I'm going to stay diligent, stay very, very focused on a handful of stocks, if any, and continue to be patient. But I don't know if the scenario is going to improve. I don't know when it's going to improve, but my hope is that cooler heads prevail and see that this is going to cause a global economic recession and try to save it before it happens. But if nothing happens over the next 2-3 months, if nothing happens over the next quarter, my base case will be a recession. Nothing happens over the next quarter. And some people are arguing that we're already in one. BlackRock CEO Larry Fink came up this morning and said most CEOs are telling him that we're already in a recession. So that's up for your judgment and your opinion on whether we are or aren't. But if we don't get a resolution to this and we do go forward with 34% tariffs on China, you're basically guaranteed a global recession. So I guess congrats. What's the little thing they like? Well, but yeah, that's my view.
I want to just keep it going around here. We got Kevin Green joining us up here. Kevin, how much were you listening to what Stock Talk was saying there?
I think you got it late.
I got the last half. I wouldn't say half, but I got probably 2 or 3 minutes of it.
We also heard a little bit last night. I know you were on there. If you're not following Kevin, you're completely missing out. And the other speakers up here, follow everyone. Kevin, you got anything you want to follow towards this conversation? We closed the day, not down. We're down a tiny bit. Up on the NASDAQ 100. Little wins. So I just want to get your thoughts on this market action today and what you're watching for tomorrow. Are you kind of watching downside again?
Yeah. So what I would say is, look, if you deployed some capital here today, good job in certain
Kevin's great,
respects.
honestly.
I would still be very, very cautious. I don't think that we're
Yeah, talk to him up here on the screen.
I don't think
This is currently talking.
Here's the thing. I'm going to call about it. Once we get but down about another 4.5%, once we get to around a 4,600, 4,650 level, I think that market really then is going to be in a make or break moment, right? We'll figure this out if it's a small, I wouldn't say small correction, it's a big correction. We'll figure it out if this is actually a correction or if this is actually a potential sustained bear market, 08 style or 2000 style, right? And so I think the price action was all right, but here's the problem that you have: very low liquidity. So if you look at level 2 quotes, if you're looking at the bid or ask, you go to the CME liquidity tool. You can do that right now. You can go tomorrow. Probably go tomorrow because it'll update for today. But I've been pretty good at eyeballing it. For even the S&P 500 futures, there was like 2 on the bid, 2 on the ask. Like it didn't take much.
I apologize to you for interrupting. Broadcom just announced a $10 billion share buyback program.
Balls of steel, Broadcom. Let's go.
No, that's a good thing. Yeah. I mean, well, what else are you going to do? Stock's getting it. Deploy that capital. Yeah, I wouldn't be surprised, actually, if you probably see some other companies do that, right? Accelerate some of the buybacks.
That's a good upside risk for earnings season, eh? Bunch of buybacks announced, the guidance is held. Obviously, that's not consensus, but could happen.
Yeah, let's get the buybacks. I think will be a good Christmas gift. Your earnings, that would be. You start seeing somebody like re-rate higher on guide. Don't be like, you gotta chill out. but what I mean. Yeah. So I would say very low liquidity. It doesn't take much to move markets. I'm making a joke, but I'm actually half serious here. So the news announcement or the fake news announcement or whatever we're calling that, right? Where market spiked higher. I could not believe that because it was a wild trade. But that spike higher and then that move lower, right? So that was what, $2.5 trillion to the upside, 2.5 trillion to the downside. So basically like a wash of $2.5 trillion in a matter of minutes. After that, if you kind of notice what the price action was doing, it was a little bit more, let's say, subdued compared to what we've seen over the last couple of trading
I'd go
sessions.
up like 5%
I would
after
also
hours.
probably assume that if you
Yeah,
were
okay.
running an automated system, like a larger institution, you probably dial back.
4.3.
And the reason why I also say that, it's very out of character for the market to not really dive, at least initially, on the announcement of re-raising tariffs up in China by 50%, making the totality 104%. I'm sorry, y'all. That should have been immediate sell signal. I care less if you think the guy's bluffing or not. We probably should have saw a drop, and we didn't. So either the market's bluffing too. Once again, I think you probably saw a little bit of slowing of trading, probably pulling those algos back a little bit. I'm not conspiracy theorist. I'm being actually serious. Sometimes when you have those type of violent events, you gotta, some people actually turn machines off. Or once again, the market doesn't think that China is either going to keep their tariffs on or Trump is actually going to do it. The move in yields is very concerning. This is probably the biggest swing one of the biggest swings. Let's call it top 5 big swings I've ever seen when it comes to 10-year yield. That is concerning for me. So I'm keeping my eye out on that. Is it moving up because economic growth fears maybe were overblown? Is it moving up because we have a 10-year and 30-year option this week and no one wants to get ahead of that just in case we do have maybe a lack of demand when it comes to foreign buyers, which is a key component for auctions? Is it because of CPI? I don't know, but the move down was very aggressive. The move higher has also been very aggressive, and it's kind of signaling to me that they're either preparing for either a major announcement in the good, or once again, there could be a show of force of maybe dumping on treasuries. And if we're in that type of environment, then that's a very tough one to handle here. And then that's what I came out and said. Amazon kind of looked decent price action wise. Nvidia caught a little bit of a bid. Personally, I took a shot. I'm about to dump that thing tomorrow and look for something else, honestly. And I think it's just gonna have to be tactile. I think crude is a little bit underpriced, but you gotta wait until we see some more stabilization. And when I say underpriced is geopolitical risk. And it's hard to trade options in this environment when you have the VIX sitting at 45 or VIX sitting at 50. So if you're not really trading the futures or you're not trading SPY and you're day trading it on shares, the options plays can be beneficial, but they're very, very risky. And the reason why I say that is if and when, because it's in a matter of time that vol will crush. Vol never stays elevated. It stays elevated for forever, right? Like this is not how it works. When that vol gets crushed, unfortunately, these out of money calls or these out of the money puts, they're going to get crushed as well. So I would always kind of just advise, if you're going to go long calls, out of the money calls, buy time, right? If you usually buy 2 weeks out, buy 4 weeks out. If you usually buy a month out, buy 2. Give yourself a little bit of time to let the price action develop. And even if it does go in the opposite direction, you're not getting smashed on the trade. And you can wait for one of those counter trend rallies as Jack was kind of talking about, because that will happen. Even if this is a bull or bear market, we will see 5%, 8% pops as we try to grind lower and or stay stagnant. So that my biggest takeaway for me, honestly, is that I don't think China's gonna back down. I think that China wants to see Trump actually go through with this and be a man of his word, because if he doesn't, it's also going to be embarrassing for him. And I think that even though China's going to get hurt, there was a really good interview on CNBC earlier this morning, like super early. It was like 4 o'clock, 5 o'clock in the morning. But it was a really good interview where they were interviewing somebody that was correspondent in China. In China, Chinese residents, they know how to deal with this pain more than the US. And that is true. And so I feel like she could probably actually last us out even another week or so before you see maybe some action being taken place. And I would be very curious to see if Donald Trump actually puts 100% tariffs on China. That would have a dramatic impact on the equity markets. We've already gone down a lot. We can go down a lot more if that's going to be the case. CDS, or if you're looking at credit default swaps, they did blow out. We talked about that last night. I put up that chart. They did blow out today. And I would suspect that that's going to continue. And if that's going to be the case, there will be a little bit more of a bid when it comes to vol. And if that lasts for too long, for me, I'm looking for the next 2 to 3 weeks. If credit markets start to deteriorate over the next 2 to 3 weeks, I think that we will have a price, especially going into earnings season. I think you probably will see a re-rating to the downside. And then you start talking about credit risk events, credit risk out there as a potential event that actually prolongs any type of recovery. I am of the mind that we will be in a technical recession by the end of Q2. Q1, we will be negative. Q2, if this lasts for another 2 weeks, 3 weeks, I would say the residual effect is going to at least be a month and a half. The only thing that can offset that is if Germany is going to repatriate. I believe they're going to look at trying to bring over $134 billion worth of gold coming out of the U.S. to Germany. That would be considered to be an export, so that could distort GDP, just like we saw the distortion of imports in Q1. But I think we probably will be in a technical recession, at least for the Q2 prelim. So I'll kick it back.
Hey Kevin, I'm gonna piggyback off your bonds thing. So when before we got the tariff announcement, for me, I was just watching China's reaction. I was on board. I'm on board still that like China could kind of flex our muscle a little bit. And one of the things I wanted to watch in the next couple of weeks was the TikTok thing because I thought that it was a nice little political football that they were using. So for me, last week when Trump pushed out the TikTok deadline 75 days, told me that, China wasn't fucking around, for lack of a better term, excuse me. And he just kind of like wanted to buy himself some time there. On the yield front, yields across the board for the most part are pretty much up. In the US specifically, 2s, 5s, 10s, 30s, all up. I don't know if that's, I don't know if that's like a signal that maybe China wants to pull their money or it's an inflation thing or a combination of both. But I really think because I mentioned this earlier just briefly, but like the same logic that was being used last week with, oh, the plan is to get treasury yields down, and it's all working. Look at it, it's at 4, it's at 3, and change. Like, you look at it today and it's like completely pulled. And I think at the very in a very small amount, at the very least, and I'm being very conservative when I say that because I think it's bigger than small amount. It's these prices are basically telling us that he's gonna need the world to get that part of the equation to function the way that he wants to function. And I think if it persists this way and people start actually pulling funds, and then if you get any kind of retaliation that's aggressive from China, even if they use the political football of TikTok, like, hey, it's off the table. I don't, just based off of how we've had things handled in the last 5 days, I don't think it's going to be handled properly on the back of that. And that's when I think, tariff wars become capital wars, which can become, actually dangerous because other things can break along the way. And I just wanted to kind of bring that because you mentioned, stuff like the yield thing. You mentioned how China can kind of like pat the ball a little bit here, given their citizens. And then the last part on that notion, we've gone 4 or 5 days, and you've had staunch supporters, try to make logic of what was going on, and you've seen several of them already kind of capitulate one way or the other on Twitter. I'm talking about like the big names. And then you're seeing a lot of people just kind of confused across the board. Unlike other places where they can kind of have like suppression of speech and dictatorships and stuff like that. We don't function that way. So I think that, the longer that it gets pushed out, the more, fragments there are internally, which kind of make it more difficult to get this stuff done the way that they want it done.
Well, the only thing with the yield thing is that so two things. One, it was technically a bull steepener today, right? So that's one. And so I'm not trying to contradict. This is why I say I don't know, right? It's just something that's it's very volatile and it's very high. Two, dollar did inch up today. I would be actually a lot more concerned if dollar was going down and yields were going up, right? So once again, we'll see this resolved. We're talking about what was it, liquidation day? No, liberation day. So we're talking about liberation day is like kicking it off. I feel like China tariffs at 10%, 104%. I think that's even worse than any other stuff. These small deals.
Maybe type it in the chat.
That's fine, right? Worry about a country that we have a $500 million trade deficit with. That's peanuts, right? Yeah, I think the China one's a big risk. Other side of that, real quick though, it is telling. So here's two things, and I'll leave it at this. So Stock Talk and I, what week ago, 2 weeks ago, well, about a week ago, we really kind of capstoned it, but we noticed that obviously we weren't getting the leaks from the White House, and that's because they didn't have any plan, right? Today, could what we saw during the middle of the market day, the 90-day pushback news, that wasn't news, but could that actually be a soft hit to the market to say, hey, let's see how this actually gets received? And I'll put my tinfoil hat on. I like to venture down every once in a while, right? One, it could have been hey, you weren't supposed to say this until we put them on after, or get closer to make a deal, or this person is just completely incorrect and a person that consumed it. But you don't flash out a news item like that because you mishear a recording. So it could have been a soft launch and see, hey, what's the market appetite for this?
It was, Kevin, I thought it was funny to see them trying to blame it on. It's like, okay, no, it wasn't us, it wasn't them, it was the mainstream, it was this guy. And it's like, okay, you also just listened to that guy. Okay.
Yeah, well, I think they asked the Trump kind of indirectly, but as much as you could directly when you're in the Oval, because they can really restrict a lot of those reporters. But Lucknick and Besson have to figure out who the hell's actually run the ship here and just let it go, because honestly, market does not want to hear Lucknick anymore. Every time he talks, it's like the world's ending. And but let me whatever. Sometimes you can see these soft little launches from the White House. Now, is there somebody that said, "Hey, just check this out," and what have you? And you saw a 3% rip. We saw a 10% move, intraday move in the S&P 500, which is wild, right? So that could be the case. Somebody could have botched it. It could have been a false report here. But even if I'm in the White House and say, hey, that little bit of spark of optimism caused $2.5 trillion of market value to come back into the market so really quickly, yields ripping. Well, the yield side I'm probably pissed off about, but markets wanted to hear that optimism. That could be a thing, right? So there's a lot of cross currents right now. I just would stay tactical, trade small size, buy duration if you can. When I say duration, buy time if you're trading options, and just stay the course, because we're at a really key inflection point with the trend line for the S&P 500. We bounced off of that. If you take the October low trend line all the way from those lows, this is what we bounced off of today, or tried to at least contest today. And so that, I would say, that would be constructive for now. Overall, I still think that we have about 4.5%, 5%. Actually, it's probably a little bit more than that right now because of close. So yeah, but I'm looking at 46. Let's say 4680, 4700, 4700. I would get into. I wouldn't say get interested, but I think that's a pretty decent washout. And on a 20-year time frame, outside of one bottom that did not confirm, all of the rest of the corrections or bear markets that we've had, that 15-month moving average was the bottom.
Kevin, on the back of the tinfoil thing, whether or not it was like leaked or whether or not it was, intentional or not, I feel like it still gives, a card to play in their back pocket on the back of the reaction that they got. Yeah, what is it, 7%, 30 minutes? So I feel like, at the very least, it kind of gives them a signal that, that people are waiting on pins and needles. Some people, at least, are waiting on pins and needles to just deploy it on the back of the headline.
Real quick, Wolfie, I bought a 50 point out of the money SPY option today. 10 minutes before that happened. And those three things 3x on that push. 50 points out of the money. Now those are expiring in 2 weeks.
Yeah.
So those are expiring not next week, but the week after. And I bought them Mondays. Dude, I thought something broke in my account. I swear to God. I was like, wait, what the hell happened? And I looked and I was like, all right. And I boxed it in. Because I mean, if you want to box in spreads, I like boxing them in, especially in high IB environments. You actually get a little bit of juice out of them. You can sell out of them too. Put stops in. But stops right now, markets are wide. Spreads get filled like crap right now. So you can box them in and try to get some of the time value. And I know you had something to say. I meant to tell you guys this the other day.
Yeah, mine, but go ahead.
I meant to tell you guys the other day. What was this, Thursday? Because today's Monday, right? So Thursday. Was it Thursday? No, it was Friday. Actually, I think it was Thursday. It was one of the big drop days or whatever. So, those micro futures contracts, right? They're kind of like the spreads on them are kind of janky. Like even in a good market, you're looking at around 3.5, 4 point spread for anything that's like close to at the money. They're not like quarter spreads. Like if you're looking at the E-mini S&P large contract, the minis, right? What was so wild though is that I bought these puts and I put a stop, or not a stop, but I put a sell limit at I bought them at 45 with my sell limit at 75, right, points. And when the market opened, because they're so illiquid, the market it's not even like the actual market creates massive drop. I mean, we had a little bit of a drop, not a massive drop to give you 30 points on a 50 delta option. But because they were so spread out, it triggered and somebody filled my limit order and then it recorrected back and those options were trading at 20 points less. So I use that as another example of just be very careful because I'm pretty sure that I get it's not a market, it's a futures option, so you can't put more, but it was wild.
People in general, that's why you should use market orders in this market.
Yeah, and just be careful when you're trading the micro options. I'm happy, right? And market maker probably doesn't care because it's only one micro. At that point, I was just playing around. But even wild stuff like that, where it's boom, right at the open got filled, and I promise you, we only moved 15 points at that time of that trade. So that's how much they just blew out those spreads. So be careful.
All right, I'm gonna give you mine on the back of that. I was looking at on Friday. I was looking at the April 8th 5:30 calls on SPY. They were trading at north of 3 and change when I was looking at them. I didn't want to go into the weekend holding anything, so I said I'd wait till today. And this morning they opened at 23 cents. When I watched them, and I was like, all right, well, about 37 to 40 somewhere in there. I just took some for fun because I was just mostly bored. I'd say 15, 20 minutes later, the headline hits. I didn't see the headline when it hit. The bid ask inverted on my screen. So the ask was lower than the bid because things got jammed up. The chart was showing me that the SPY was at $4 higher than what the L2 was on my screen. And I didn't necessarily know originally. I didn't know what the real price was. Opened up my secondary broker just kind of check it. And then they went from 23 cents on the open or 30 cents on the open, whatever it was, to 5.7, give or take, or 5.9 on the highs. I was fortunate to get filled on the sell in the 4s. But then as soon as they got there, they went right from that 5.9 right back down to 0.4 in like 12 minutes, I'd say. So yeah, crazy, crazy expansion and crazy decline on the back of that. It's just pretty wild to see. But I don't know. It just, to me, it speaks that the action that we got kind of, I think, gives them that card in their back pocket. Like if we have this headline, people are waiting to deploy it.
That comes with pride, though. I don't know if you're around. Are you seeing a massive like re-rating and margin requirements on ES? I would imagine so, but I'm just kind of wondering if you've seen something like high level. It's like, yeah, man, they doubled in margin requirements, or if it's not that aggressive. If you're there. And it's not there. Okay.
Do we have Amp on the spaces? Can you hear this?
I'm here, Kevin. Sorry.
Sorry.
The quick thing that I did notice today, I honestly, that exact scenario you mentioned, I didn't see that, but I did notice the
You're muted
cumulative
on the
delta.
spaces.
Can you hear me? Okay, sorry, I was just double checking here. So the thing I did notice was the cumulative delta was actually green today. There was more buying than selling. Now, a lot of that obviously probably covering. ES did go red at one point, but I never saw InQ's cumulative delta buy versus sell go in the red since last night. It was all buy side. So I did see that part was interesting, but that was the only thing that really stuck out to me on the future side of things. It stuck out to me on the future side of
Oh,
things.
yeah, was it on the buy side? Are you saying after we hit the lows
Well,
yesterday?
and sorry, I guess I couldn't hear you.
From when we hit, I guess basically from open. Yeah, it's just from futures open last night at 6 Eastern. I never saw anything go red as far as more selling than buying, even with that massive drawdown. And then we finished the day in the green on both. I mean, I'm looking here, and ES was red at one point in the middle of the day, and now it's up 14,000 to the buy side, 14,000 more on the buy side than the sell side. InQ hung out in this like 2,300 range the entire day, but I did think that was interesting to note that there was more buying than selling going on in the futures.
Yeah, volume's gonna be. It looks like we're outstripping probably by the 4 p.m. or the 3 p.m. close Mountain Time. So what? 6 p.m. whatever. We might be outstripping volume from yesterday or Friday's candle too on InQ. Yes.
All right, you get to you can cut off for a second.
That's it's not. I mean, that's a.
Yeah.
Awesome. Well, let me leave and then rejoin. Hope they continue. Imagine if I was the one hosting that spaces. Let's close this one down though. I think this was a good start to this. If you're still in here, make sure you're subscribed to the channel. Like I feel like the people in here have been in here the whole time. I appreciate you. Wrote we'll see how the watch hours come in. 70 watch hours on this. Not bad, not bad. We're also up to 6250 subscribers. I appreciate you guys. Maybe we'll try this again tomorrow. We shall see. We got up to like 92 people to start. We were chilling with like 40, 50 most of the way throughout. So that was good. Make sure you are also turning on, hitting that bell button and turning on notifications for the channel. I would say that's something to also go in and do. But I appreciate everyone. And if you got anything you want to throw out here towards the end of this live stream, how are you feeling? Was this a stressful day for you because of this and everything that's going on? How was this last hour from your front? And be honest. I want the honest reviews. I know you got the background too, but.
Was it? I don't know. Stress. I don't like being unorganized in some cases, but I don't know about stressful. I thought it was a great day. It was, jam packed.
I live life
pulled off a lot of
unorganized.
things. Love it. I love it. I thought this was great. And bottom of the barrel. It's only up from here.
1 second. I'm talking on space. All right, cool. Sorry about that. No, I appreciate everyone for joining in. Make sure you are subscribed. I'm gonna try this again tomorrow. So hit that bell button. Maybe we even just throw out a little live link for tomorrow and get ready to start getting a reminder set for that. But try this again, at least again tomorrow, this week. We'll see. We'll talk on the back end, regroup. But I thought this was well. I enjoyed it. Had some spaces going, got to hear him. You might even be able to hear right now. Let's close over that a little bit. Yeah, and I appreciate you. If you want to close this down, subscribe, everybody. Hit that bell button. Join us like this. I don't know. We'll be back tomorrow. See ya.
Later, everyone. Appreciate y'all.